Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. As we head into the final week of July and into a fresh month, rapidly surging global inflation, rate hikes and recession risk, they are now emerging as the three biggest and most explosive macro themes driving the financial markets. Throughout this month's report, we routinely highlighted to you the commodity markets will move in very predictable week-to-week ranges. Once again, everything identified has played out exactly as predicted. Making money in these markets has never been so easy as it is right now. Rate hike surprises, as they are known, have become one of the most predictable money-making opportunities that continue to present savvy traders with an endless flow of back-to-back profitable trading opportunities almost on a weekly basis. The great news is that this trend is here to stay and set to continue throughout the third quarter of 2022 as interest rate hikes take front and center stage. Last month, the Federal Reserve, they dropped a bombshell on the markets by raising interest rates by 75 basis points. That's the biggest increase since 1994, with Fed Chairman Jerome Powell signaling yet more jumbo-sized rate hikes ahead. One day after the Federal Reserve's biggest interest rate hike in 30 years, many other central banks jumped on the more bigger and faster rate hike bandwagon, scrambling desperately not to be left behind and boosting the odds of a recession significantly in the process. The Swiss National Bank made a surprise 50 basis point rate hike for the first time in 15 years, whilst the Bank of England, they moved rates to the highest level in 13 years as it anticipates inflation to hit 11% this year. Elsewhere, the Reserve Bank of Australia and the Reserve Bank of New Zealand equally surprised the markets with a 50 basis point hike. In total, more than 60 central banks faced with unprecedented inflation, they have now joined the global race to raise hikes aggressively at any cost necessary. This marks the biggest number of large rate moves at any time since the turn of the millennium and eclipsing the most recent global monetary tightening cycle, which was in the run-up to the global financial crisis. Fast forward to July and the narrative is once again in full force and showing no signs of slowing down anytime soon. Earlier this month, Canadian policymakers, they became the latest to surprise the markets with a bigger than expected rate increase, opting for a 100 basis point hike, the largest by any G7 economy since 1998. Last week, the European Central Bank, they also joined the club with, yes, you guessed it, a very predictable, larger than expected interest rate hike as it moved to contain record inflation brought on by rising energy costs and the war in Ukraine. Are you starting to see the pattern here now? Looking ahead, interest rate hikes will remain the primary focus with all eyes on the US Federal Reserve. This month, consumer price inflation in the US, it surged to a new 4-decade high of 9.1%, the largest annual increase since November of 1981. Prior to the inflation data, traders were predicting another 75 basis point rate hike at the Fed's upcoming meeting. However, the hotter than expected inflation reading, that has completely changed everything, intensifying pressure on the Fed to respond with a historic, supersized 100 basis point rate hike this month. Those odds have now been hardened by a long list of leading Wall Street banks increasing their rate hike expectations, signaling a larger move was now in play. Extraordinary times, they do create extraordinary opportunities. Right now, this is a trader's paradise packed with endless flow of back-to-back lucrative trading opportunities to generate huge profits fast, regardless of whether the markets move up, down or sideways. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. So first of all, moving over to gold. So we discussed with you last week on Tuesday's gold asset of the day. Our expectation was that gold would be an excellent buy opportunity on dips back below 1700 down towards 1690, with the expectation that we would see a breakout back towards 1720 and 1725 zone. All of that documented with you last week. Feel free to go back and watch Tuesday's report and Thursday's report where we highlighted that to you in more detail. That's absolutely what we saw last week. Fantastic opportunity to buy into gold when it broke back down towards 1700. In fact, the price action stayed very little time below 1700 before a huge slingshot higher on Thursday after the European Central Bank, when we anticipated that they would go ahead with a 50-point interest rate hike, and with that we saw a god candle to the upside on gold, over a 600-point breakout from Thursday through to Friday, from the highs to the low. We had a huge impulse move to the upside after the European Central Bank announcement, which also followed through on Friday. Many of you got in touch afterwards that you were able to capitalize massively off the back of our analysis, which very clearly stated opportunities last week to buy in back down towards 1700 and 1690 if we were to see a revisit back down towards those levels. So again, well done to everybody who massively capitalized on that trade opportunity last week. Lovely 600-point breakout there on gold. Let's move it over to copper. So we also put this on the radar for you last week. Yet again, hedge funds and money managers in the last week, they've increased their overall net long on copper. So copper is now up 2.3% in the week. We did get a nice bump higher at the start of the week, then we've continued to consolidate throughout the rest of the week, but on Friday we broke out towards 2-week highs. I still like the price structure here on copper. We've continued to accumulate on the dips here over the last week, building into a number of positions. This has also been similar with platinum in the last week as well. So platinum's up 3.3%. Platinum, of course, you know, is a highlighted market. We went over with you last week too. Opportunities to be buying in with platinum back down towards the 800 zone. Expectation was that we would not spend much time at all down at the lower end of these channels. So last week we saw platinum prices, they broke out over 700 points to the upside in a single week, again up 3.3%. Like European Central Bank announcement impact on gold, platinum also had a massive breakout on Thursday through to Friday as well, offering opportunities to quickly benefit from that breakout to the upside. Now oil was also excellent for us last week too. Right off the bat, off the Sunday open, we bought into oil, which gapped lower off the Sunday open. Within 24 hours we were banking 500 points with our clients at the Gold and Silver Club on WTI crude oil. We had a breakout back towards 101 US dollars per barrel, banked a bunch of profit. Then with this rollover back down towards 95 US dollars per barrel, we've again sniped in, looking for opportunities to keep coming in and out this market. Oil right now is very much a trader's market, being very quick with these moves right now. It's quite straightforward at the moment to quickly bank 500 to 1,000 point moves with the volatility that we are seeing on this market right now. I'll also put Brent crude oil on your radar as well, depending on which platform you're trading on. As you move over to the next contract on this market, many platforms will be showing a 400 point gap lower for Brent crude oil as you move into next week. So again, I'm looking for opportunities to trade that gap if we do see, similar to what we saw last week on WTI crude oil, which gapped down over 300 points off the open. If we do see a similar gap down for Brent crude oil, if it gets sub $100 per barrel, I'm interested again to see areas of liquidity where it gets a bid, and I'm looking to sniper in yet again to build out further exposure on this market too. Moving over to silver as well. So the silver to gold ratio at the moment has broken down to multi-month and multi-year lows. With that, we continue to see gold, platinum, palladium, copper all outperforming silver at the moment. So you've seen this even on Thursday through to Friday, where silver has been under pressure, as opposed to the other metals, which are all up in the last week. Silver prices are not. They're down 1% into Friday's close, still lagging behind the other metals. You've still got opportunities here if we are to see silver stay between $18.50 per ounce, back down towards that $18 per ounce level. I would not expect silver to be spending much time down at these levels, but yet typically you want to be trading the metals that have the most strength behind them, as opposed to the metals that are lagging, which is where our focus remains very heavily at the moment on gold, on copper, and also on platinum and palladium. Palladium had an immense move on Friday, so a god candle on this market as well. A 2,000 point breakout to the upside. We discussed this with our clients last week, the expectation of palladium to get a breakout after this range-bound price action that we've seen over the last week. Box set up for a potential powerful breakout later on in the week. Platinum and palladium are strongly correlated, and so is gold, obviously, with silver as well. And we've seen that nice bid to the upside on many metals after the European Central Bank announcement last week to benefit from this current volatility, which is providing regular trading opportunities for you. We are seeing one of the greatest wealth transfers ever in history in this new era of economic change, which we find ourselves in right now, with rapidly surging inflation, the cost of living rising, energy, gas, food bills all soaring. It's once again an important reminder that you can't just rely on one income stream. If your goal is financial freedom, then you need to start building multiple streams of income. The importance of having an essential income generating skill like trading, it's no longer a luxury, it's now a must-have necessity. In the words of Warren Buffett, The best investment you can make is in yourself. You can never lose when you invest in yourself and when you invest in new skills. If you want to upgrade your income, then you need to upgrade your skills, and there's no better skill than trading. If you want to maximize your money-making potential and thrive, not just survive, in these highly macro-driven markets, then you need to adapt your strategy so that you can grow your income to massive levels. If you want to gain the ultimate edge to supercharge your wealth in these highly profitable markets, then you need to trade like the hedge funds, the money managers, the institutions, utilizing a professional research-driven approach. Having access to the right data at the right time, that is the single greatest difference between ordinary and extraordinary results. The greater your data and intelligence, the greater your edge in navigating these fast-moving markets with precision, accuracy, and the highest levels of profitability. Trading like every other misguided retail trader out there, using outdated technical analysis and gimmicky technical indicators will not work. We're no longer in the 1980s, we're in 2022, the age of data. Every industry right now, including the trading investment landscape, is being disrupted by data. In this day and age, if all you're doing is relying on outdated technical analysis and gimmicky technical indicators, then you're guaranteed to get crushed and chopped up in these markets, when every other well-informed and well-educated trader out there is creating life-changing wealth. If you want to change your results, then you have to change your thinking. Never underestimate what you can achieve in the next few months from now with the right skills, knowledge, and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP.